Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's the 5th of March. My name is Russell Shaw. I'm a senior market specialist at FXCM. And before we get into the live stream, I'm just going to go ahead and bring up the disclaimers. I'm going to start off with the high risk investment warning. I'll keep this on screen for a few moments, and then I will turn it over to the commentaries disclaimer, the market commentaries disclaimer. Just another 3 seconds. All right, let's just bring up the market commentaries disclaimer. Just keep this on screen another few seconds if you can just finish reading through that. All right, excellent. Thank you very much. Now, let's start off with just taking a look at the real rate. Let's just zoom in here. And what we've been looking at is a potential turning point in the real rate. And you can see that we've been looking at hi Raj, good morning to you, welcome. You can see that the candle third from the end is the reference candle. It's the candle with the highest high in at least 3 candles, and then last week's candle closed below the low of that reference candle. So that's the potential turning point. Okay, now I don't know if we do get the follow through, but once we've got the reference candle locked in, then the probabilities for a swing, and in this case a swing lower, do increase. RSI, it's broken below 50. What we can do with this RSI, by the way, we can just put in a trend line here, and we can just monitor the trend line. Let's just make sure that it is okay. I'm just going to fix this up. All right. Yeah, there we go. So I think that we've got the movement below 50. And now what we can do is we can watch for a break below this trend line. So we'll just put a 0.1 there. Okay, so we'll see if we get a break. And remember that the RSI breaks are not really primary signals, they're secondary signals. So if we get the momentum signal, which is the RSI break, we'll just carry on looking to see if the real rate follows us down. Now, something that is really interesting, I'm going to take the RSI out here. And what I want to do is I want to bring in gold. We did take a look at gold yesterday. Let's just bring in gold underneath this. Okay, so here's the gold chart. And what I'd like to do is put in a correlation coefficient. Okay, because something interesting is happening here. So just click on indicators and just type in correlation coefficient. Okay, and just make sure that when you've chosen correlation coefficient that we put it as gold, right? XAUUSD. We'll use the FXCM instrument. Okay, now take a look. What's happening here is that gold has typically been inversely related to the real rate. But what has subsequently happened is that you do get these brief sort of pauses where it loses the correlation. So you had going back to January 23, there was a break in the correlation there. And then if we go through to December 2023, there's a break in the correlation there as well. And what's subsequently happened is that the correlation has reattached. Okay, so what we can do is you can see over here that we've got about a 65%, 64, 65% correlation here is reattaching. So as the real rate evolves, let's carry on looking at gold, because if that correlation holds and the real rate serves as a driver for the precious metal, well, that's something that we should take note of, certainly as traders, right? So there is the reference candle in the real rate, and we've actually got a reference candle in gold as well. Okay, but this is a bullish one. So here you've got the lowest low in at least 3 candles over here. The real rate, you've got the highest high in at least 3 candles. And then what happens is that it closes above. And once we get gold closing above the reference candle, what you can see that it started a really nice swing just over the last 2 weeks. So let's just take a look at gold again. It has been on our watch list for quite some time. And what we'll do is take a look at the weekly chart. So here's gold's weekly chart. And again, here you can see it broke above that trend line in its RSI. And now it's pulling away from the 30-week exponential moving average, isn't it? And the 30-week exponential moving average is moving up. All right. So the weekly chart, I think, is looking very good. Let's go down to our daily chart. And you can see that the daily chart is interesting as well. I just want to zoom in. And it's moved into what we call zone 1 after moving sideways. So it moved sideways. And then it moved into zone 1. And look at the explosion in volatility. Look at the Bollinger Band. The red Bollinger Band has sparked upwards and the bottom one has sparked downwards. So the volatility in the yellow metal there has really just notched up considerably. We do have an overbought condition here. So I think, given the fact that we've had such a strong swing in the precious metal, there may come a time where there is a pause or some profit taking, and the RSI normalizes. But given how good the weekly chart is, and given I think how good the daily chart is looking, the pullbacks would be compelling. Fundamentally, well, we've seen that the real rate has started to come down, and we've seen that the correlation between the two instruments is starting to reattach. So I think that the potential upside for gold, the future potential upside, shouldn't be overlooked. Okay, so we keep that on the watch list. If we take a look at the hourly chart, which is something that we did look at yesterday, I'm just going to go ahead and bring that up. Hey Mia, good morning to you. Welcome. All right, so this is the gold chart for on the hourly time frame, and then we looked. This is where we were 24 hours ago, round about here. So we drew in these line studies 1, 2, 2, 3, and then we started off the next 1, 2. Okay, which did actually kind of manifest. Truth be told, it's really started there this weekend. Pull across, and then it looks as if we've got the next 2, 3 here. Okay, and now of course the question is, we get the next 1, 2. And I think that we just got to be cautious here. Just sort of debriefing off of the back of yesterday's movement, we did say keep an eye on the stochastic. Stochastic declined, but then it reasserted itself back into the upper quintile, and we've just had really terrific movement on gold. What's happening now is that it does look as if the momentum is slowing. So just keep an eye on that 80. Do we dip below the 80 level? If we dip below the 80 level, then the price may pull back, and that wouldn't be too surprising given the fact that we got this overbought condition on the daily. But I think that the gold price is looking quite positive at the moment. I mean, we're looking at $2,115. That's really terrific, isn't it? So if gold is moving up, let's take a look at the US dollar, which would be, one would think, the contra of the gold price. So let's take a look at the US dollar. So I'll just bring up the US dollar weekly chart, and then we'll do a top-down analysis. A top-down analysis there. Okay, so this is the US dollar. Here is the potential reference candle. I'm just going to go on mute for a moment. I could just feel a cough. I'm begging your pardon. Excuse me. Okay, so here is the reference candle. Here's the reference candle. That's condition 1. We've only got condition 2, so we don't have the reversal just yet. So this is interesting. Gold's pushing up, but we're not seeing the greenback pushing down yet. I think that in order for gold to fulfill its potential, so to speak, we would need to see the greenback decline. Let's just keep an eye on the greenback relative to its reference candle, relative to its 30-week exponential moving average, and of course relative to 50 on its RSI. So it does look as if we have got some sort of movement towards 50. So there does seem to be a loss of momentum on the US dollar. Kim actually said that a few weeks ago, or at least a week ago. He said that the dollar is basically losing its momentum. We don't quite have the reference candle that's neat over here. Once we get the reference candle on the dollar, I think it will make things a lot easier. If gold goes up, would the Aussie move up as well? We'll take a look at the Aussie. So the Aussie is what we call a commodity currency. So there's a few commodity currencies. So the Aussie would be one, the Canadian loonie would be one, the Kiwi, the South African rand. These are all commodity currencies. Theoretically, when the commodity cycle sort of moves, the commodity currency should move with it, right? So we'll take a look at Aussie in a moment. Let's just finish off with the US dollar here. What's interesting when we take a look at the Aussie, remember what is the base currency, the Aussie? What is the counter, the quote currency? It's the US dollar. So the US dollar is going to be a huge factor when we're looking at the Aussie as well, because it's the second part of the equation, so to speak, right? So if the US dollar is moving sideways here and not down, that's going to take some of the power out of the move from the majors, right? If the dollar moves, then we potentially have movement in the majors. Let's just take a look at dollar in on the daily chart. We'll take a look at it in terms of the zones, right? So let's just go ahead there, bring up the zones. And this is interesting, Kim. Take a look at this one. All right, so this is the dollar daily. I just want to zoom in here again. Just bear with me. Okay, that's better. Well, you can see we're in no man's land. We're in neutral. Okay, so we're in neutral here. All right, Raj. All right. If the sound continues to break, just let me know. I'll turn the camera off. That should give us more bandwidth. Is the sound okay now, Mia? Is the sound okay now? Just let me know. Otherwise, I'll turn the camera off. But the US dollar is in zone 2, right? Zone 2, no man's land, neutral. Where is the RSI? RSI is oscillating around 50, is neutral. Okay, so we've got the Aussie basically consolidating. Kim, it's consolidating. So if the, did I say the Aussie? Sorry, the US dollar is consolidating. US dollar is consolidating. So if the US dollar is consolidating, that's going to feed into the Aussie movement. Let's take a look at Aussie. Okay. I'm going to turn the camera off. That should help. All right, I've turned the camera off. We should have a better bandwidth here. Bandwidth now for the rest of the live stream. I'll turn it on just as we end. Let's just take a look. Let's take a look at the Aussie. So there's two aspects that we're going to be looking at the Aussie now. So Kim asked, is the Aussie going to be affected by the gold price? Let's take a look at that, and then we'll see how it's reacting to the US dollar, which is just in no man's land at the moment. All right, so take a look at this. Let's bring up AUD USD, right? So here's the Aussie. And what we have here is the Aussie under the 30-week exponential moving average. So the 30-week exponential moving average is also pointing down. So it looks to me as if there's actually some bearishness when we regard the Aussie US dollar. This is the weekly chart, and you can see here is the RSI. Let's just fix this up. I don't like the extended right. Let's just put this here. All right. Guys, just let me know if you can hear me. I'm hoping it's okay. The RSI is below 50. Okay, so Kim, if I had to say to you, do we have an upwards bias here or a downwards bias? The answer to that is we've got a downwards bias. What we can do is just put the gold price underneath. Okay, and let's put in a correlation coefficient here. Let's put in a correlation coefficient. All right, so by and large, there does seem to be a positive correlation, but it's broken, right? So the correlation is not 1-for-1, Kim. So we're just going to have to accept that, right? Does it go out the window? All right. We'll do an exercise. Okay. So you can see it breaks. The commodity rule goes out the window. Well, I'm not sure gold in of itself is reflective of general commodities. Gold has very specific properties and characteristics associated with it. You know, gold fever. You know, the image of the old sort of uh, gold gold prospector. I'm not sure if it goes out the window, Gemma. You may be sort of off the mark there. Let's take a look. Okay, let's take a look. Let's take a let's make a new layout. Let's make a new layout. All right. The best way to look at this is not with gold. Best way to look at this is not with gold. Okay, so what we're going to do is we're going to introduce the CRB, the commodity index, the CRB, Thomson Reuters Jeffries Core Commodity CRB Index. So here's an index that we can take a look at in terms of commodities. All right. Yeah, what we can do here is we can add in some commodity currencies. So let's put in Aussie. Let's put in, let's change this. Let's change these to lines. Okay, so we've got the Aussie, let's put in the Kiwi. So let's put in the New Zealand US dollar. Okay. All right, let's just change this to the FXCM instrument. Let's do that again. Okay, let's make this a line chart. Okay, so we've got the Aussie, we've got the Kiwi. Let's put in the Canadian, the loonie. But what we'll do is we'll invert it because we want the Canadian to be the base currency, right? Okay. Let's make this a line chart. Let's try that again. Okay, we can even put in the rand here, but we'll have to invert it. So let's put in the rand. make it a line chart. All right, what do we got here? What have we got here? Okay. So here is the commodity. 1, 2. This one's the wrong side. That goes there, there, there. Okay, so the New Zealand US dollar is perhaps a little bit of an anomaly on that leg. Then we have this leg here, this leg here, this leg here, this leg here, even the rand. There we go. Then we've got this leg there. Looks there. We've got this leg there. We've got this leg there. So up until this stage, it's looking all good. It's looking pretty strong. And then here we've got a strong leg here. It falls a bit flat. So we've got on the Aussie a movement here, a movement here, a movement there, and even on the rand, got a movement there. So we're pretty strong in terms of correlation with commodities, and then kind of on an absolute level there, there. There, there, and there. With you basically got anomalies round about here. So, Kim, by and large, the correlations are strong. Okay, so the commodity rule doesn't go out the window. It's just that gold may have other characteristics to it that perhaps the other commodities don't have. I hope that helps. I'm just going to turn on the camera because we sort of coming to the end of our. Okay, does that help, guys? Just let me know. We kind of. I hope today was useful. You can see that the commodities were the commodity cycle and the commodity currencies. They're pretty strong. Pretty strong. All right. Let's wrap up here. If you found that useful, just go ahead and click on that boost button. It would be much appreciated. I will set up another webinar for tomorrow, but let's keep on track for tomorrow so we can see if there's any opportunities. Let's just keep on track for tomorrow. All right, guys, let's wrap up here. Thanks very much, and speak to you tomorrow.